Building a bias isn't just picking a direction, it's understanding what price is likely to do on both sides of the market. Today, I'm going to walk you through my process of building a bias, going through bias versus narrative, how to build your narrative, and how to scale or scaffold from your narrative to your entry. First, what bias actually is, and I think it's used improperly. Bias is just looking for direction. It's price without context. It doesn't tell a story. It doesn't know why, or where, or when. It doesn't know anything. It's just having an idea where price is going. That's it. Why bias actually fails, right? Bias alone, you just have direction. You don't know where price needs to go to reach that direction or reach that draw on liquidity. You don't know what's going to happen or what could happen after that draw on liquidity. You just have no context. You have no like awareness of the rest of price. And this is why I focus on narrative. Narrative is multiple things, right? We can understand manipulation levels. We can understand like when we can look for continuation and when we can look for the DOL to be met, right? So narrative has three questions I broke it down to. Where has price been? Where is price now? And where is price going? Okay. Um, where has price been is we're really looking at the power of three and high time frame market maker model that we're in. Where price is now is where we're opening relative to manipulation or different phases of price of accumulation or for within distribution. Where is it going? We're looking for open draws and liquidity and just looking for further targets. Okay. So narrative, it really is the route. It describes and allows you to build context around price and understand the why, not just the target, the what, right? Where's price been? Here we're looking at different phases of price, right? AMD, accumulation, manipulation, distribution. Also, we're looking at daily profiles, where we have a classic London protraction, right? Where Asia accumulates, London manipulates and creates low of day. And then we have London begins the distribution, and then New York continues it using a high time frame imbalance to continue higher. You can see London low of day or high of day would likely be formed between 2 and 5 a.m. And the New York continuation, we want to see, lower session or highest session form between 9:30 and 10. And then for this New York reversal profile, we see that Asia probably is retracing into a key level. London has accumulated, generating liquidity on both sides. New York takes out liquidity at London lows and then begins to distribute higher, continuing high time frame trend. So how do I use this within my daily bias, right? Where has price been? I'm looking at what the previous sessions have done, okay? What has Asia done? What has London done? And what is New York likely to do? But it is important not to pattern this, but it's good to be relevant about the phases of price and about establishing a low day or high day. So low day or high day, how can we confirm that, right? We want to see a high time frame key level, which is for me personally, the 15-minute or higher, mitigated or swept on two or more assets. So I trade ES, NQ, and YM. I want to see at least two assets sweep a high time frame key level, expand into the key level, and expand out of it. Further, we can look for confirmation of the key level by the study of, or you can use an SMT, or further, if you study quarterly theory, it can be cracks and correlations. So there's two variations that I like to look at just for using SMTs with key levels, right? We want to see SMT with the key level itself, right? So that would mean this asset has swept the key level and another asset had not swept the key level. So that forms an SMT. Another variation is over here, variation 2. If all assets sweep the key level, and then we resweep it and form a crack and correlation or SMT with the resweep itself, like right here, right? We sweep the key level, and then after, this is a high time frame candle, like a 1 hour candle, another asset resweeps this low, and we form an SMT with a previously swept level, right? So that's further how we can confirm the low day or high day. Also, we want to have it form at a key time, right? We talked about the sessions, right? We want to see low day or high day form between 2 and 5 a.m. or around 9:30 to 10 a.m. With these key times of the sessions itself. Okay, now where is price now? We looked at where is price been, the sessions and confirming low day or high day. Where is price now, right? We're looking at higher time frame power of threes, weekly, monthly, right? We're seeing that if weekly is accumulating or weekly is currently manipulating lower, etc. Like with monthly as well, the same thing. Are we in a higher time frame market maker model? Okay, we can look at classic weekly profiles. Tuesday high or low of week. If we're consolidating, we're seeking to shore. We're looking at the news because news can be volatility drivers with throughout the week, and we're seeing if we can align that with the weekly power three weekly profile. I'll get more in depth into that. Right here, just a simple market maker sell model. There are different stages, right? If we're, we already put in the smart money reversal at the highs, we could look for continuation lower down to original consolidation. The example is where are we opening? This is very important. Where is price opening relative to what we have done already, right? We already studied what is price done. Like, okay, so now what can price do now? Where is price opening? Right, 930. This is a New York reversal profile. We're opening likely at low of day. We're looking for if we're bullish prior, the higher time frame. Say we're in a higher time frame market maker buy model. We want to see the daily sessions or the daily profiles align with the higher time frame. So here we look for a New York reversal, and because 930 opens at low of day, we want to see a key level below 930 swept to push higher. For a classic London low of day or London protraction, right? We probably have a key level swept in London, and because 930 is opening higher after London put in low of day, we want to see this low of day be protected and 930 continue from imbalances London had created, right? More in depth. Okay, so where are we now? There's a lot to look at. We're going to go from left to right, Monday to Friday. Okay, this is also trading at all-time highs, but let's look at it from a broader aspect. Okay, so Monday, we're opening right here. We open lower, tapping into a high time frame imbalance. Okay, so from there, right, we're obviously bullish. We want to see higher prices. We're continuing this buy model. Okay, fast forward, we continue to push lower. I would say that New York opens on this candle right here, and because we're bullish and we're trending lower, we want to see price manipulate lower and then open higher. So um, again, this is just saying where this is covering where are we opening? Okay, so 930 New York opens lower and we're bullish. We want to see manipulation lower and New York reversal. Obviously, we only see distribution up to this internal high. Further, okay, again, where are we opening relative to what price is done? We have put in this manipulation and now we're distributing lower. Okay, so New York opens, I would say on this candle right here, because we're bearish now at this point, we're distributing lower. We have open drawn liquidity below. We're opening in a high time frame imbalance. We want to see this used as continuation back down to this high time frame drawn liquidity. Okay, further, right? Now let's fast forward to Wednesday. We put in this low of week, and for low of week to hold, we want to respect PD raise above this low of week. Okay, so now if we say this is a open, this is a weekly buy model. We're opening, we accumulate, we manipulate lower. Now we want to see distribution back higher, right? Okay, so Wednesday opens, and we're just accumulating, engineering liquidity at the highs, and we have put in this this low that didn't manipulate too significantly. New York opens lower, right? Manipulates lower, respects low of week, confirmation that this is a protected low, and then, or actually, sorry, this is New York, but we have this volatility driver. But still understand that because we're opening after low week is put in, we want to see bullish development of our daily profiles and session profiles, right? Thursday, same thing. We open, or we're looking for bullish profiles to continue higher because we have this low week put in. We have manipulation here. We don't want to see below this low if we're bullish, so we look for manipulation lower and distribution higher. Again, Friday, right? We're opening, we engineer liquidity at all-time highs. we manipulate lower into this high time frame imbalance, and we're just looking for continuation higher. What am I really getting at here is we're looking before price. Let's say after Tuesday low week is put in, we're really only looking for everything else to develop bullish, right? If we're really, the weekly is distributing bullish, monthly is distributing bullish, we're at all-time highs. You want to see bullish development of our power threes. Okay. And I'll get into this in here as well. So where is price opening relative to, this daily profile? So pretend this is the daily open. We open low, and now this is our distribution to our new high of day, and then we go here and we close. We get our high and we close. Okay, so where's 9:30 opening? I trade New York open. So where's 9:30 opening, right? If we don't have a low of day established and 9:30 opens at current low of day near a high time frame key level, we can expect a New York reversal, right? So that would be a New York reversal profile. If 9:30 opens and we've already created and established a low of day, probably during London session, and we're opening within the distribution of daily power of three, and we haven't mitigated any buy side draws, we're looking for New York or 9:30 to open low within a high time frame imbalance, right? Create a protected low of session, and then distribute higher to our daily objective. Okay. And then sometimes we can have tricky days. It might not always be this classic buy day or classic sell day in the other, like if it's vice versa flipped. So here's how we use conditions. Okay. So in this example, right, price creates a range high. We might not have a clear direction of the monthly, weekly power of three or higher time frame trend. So we're more using conditions. Conditions are just going to be imbalances or key levels that price must respect or disrespect to reach the opposing side of the range. Okay. So price creates a range high and we come down and we sweep a high time frame sell side draw, right? There's more sell side beneath and there's more buy side above. So we're definitely range bound. Okay, so how can we trade this if anything isn't clear? We're going to use a condition of this high time frame gap. Okay, to use this, we basically just wait, right? We wait if price inverses this gap and can use it as, continuation to the range high, or if price respects this gap, form some protected high within the gap, and then we can move lower to further sell side, right? So that's how we use conditions. If we're, nothing's clear narrative wise or higher time frame, we want to use higher time frame imbalances to allow us logically, with PD arrays, to see if we're disrespecting, this bearish PD array, or we're disrespecting bearish PD array and we're respecting bullish, right? We're going to continue to move higher to higher buy side draws. Vice versa. If we're respecting bearish, we're likely to move lower, and we can play continuation of bearish PD arrays as well down to the lower draw. So that's just how you can use conditions if something's not clear of the daily bias. Also, this can be used for a low of day example. If we want to confirm low of day, right? Say we sweep and we manipulate lower, and then we could chop around, right? And now New York's opening, and how can we know that? How can we know that this is low of day, or how can we know that price won't come up and move lower? We can simply wait. Right? Obviously, we're accumulating here. Okay, so we wouldn't trade this, but what we can do is there's likely an imbalance formed below. So this high time frame gap can be used as a condition to see if this low of day will be protected. Okay, if this low of day is protected, obviously you won't see it visited, and price would have to respect this high time frame gap to move higher. If price inverses this condition of this high time frame gap, price is likely to move lower below this low or reach this low. Okay, that's just how you can use conditions when you're within a range to give yourself a logical way of understanding price does. Okay, further. And like just an example in here, right? We form this low of week. And if this low of week is actually low of week, we would have to respect PD arrays above low of week, right? This 1 hour imbalance is the last PD array, our fair value gap, defending low of week. So if we're going to have low of week, we would respect this PD array and move higher. Okay. But yeah, that's how you can use conditions to determine price. And again, you can use it in here, right? If we were this internal high, this could be just this is just an internal high we could target. Okay. If we're going to reach this internal high, we have to inverse this fair value gap, right? So if we inverse this fair value gap, we're likely to see this internal high get swept. Okay. Same with this fair value gap right here. If we're going to reach these highs, we have to inverse this fair value gap. What does price do? Price sweeps this high and respects this bearish fair value gap, and we see lower prices. Again, you can see after that, if we're going to be bullish still, we have to hold this bullish fair value gap. What do? We inverse it and continue to the downside, respecting bearish PD arrays. Okay, so that's just a example. Now, New York session volatility drivers. Okay, this is how we can establish and go further into low session, high session, low day, high day, and have a better understanding of when these relevant lows and highs should form, when the manipulation should happen. Okay, when there's 8:30 high impact news, can likely see it manipulate. So 8:30 can either manipulate or it can expand towards drawn liquidity, potentially engineer liquidity to return to later. So it's either manipulating or expanding. Okay. So, and I'll show examples of this after. If no 8:30 news, we can see 9:30 be a great volatility driver. And this happens a lot. You can hear the Judas swing. So 9:30 can hold a lot of manipulation. There's a lot of volatility that happens then. If we have 10 a.m. red folder news, you can see that be as a volatility driver and form low session, high session, low of day, high of day. And we can trade from that being the manipulation. And then if a low or high forms outside these times, it may not hold, meaning, sometimes we have like weirdly timed highs or lows, which I can get into in examples, but I would just focus on these top three right here. Okay, one example here. So this is the 1 hour time frame on the left, 5 minute time frame on the right. Here, this candle is a 8:30 high impact news, like volatility driver, right? A volatility injection. Okay, so we can see that we've been expanding bearish, respecting bearish PD arrays, so we're likely to see lower prices. Okay, our price comes up, 8:30 manipulates this high, so now 8:30 is manipulating. It's expanding into a key level, and we see expansion out of the key level. Okay, so if we're going to be bearish, we're likely to respect this high. Okay, this 8:30 high impact, news high that we made manipulating a key level. Okay, so now we're looking for price to respect this high. Oops, and then continue lower. So when can we look for? If you have 8:30 being the high of session, we can look for continuation from the other times, the 9:30 or 10 o'clock, right? So what happens? 8:30 manipulates, we expand down lower, 9:30 opens lower, so we cannot have continuation just yet. So 9:30 expands higher, we form the Kraken correlation, or one asset sweeps, two assets sweep this key level at 10 a.m., right? Random time. So we have 8:30 manipulation and we have 10 a.m. continuation. Okay. So 10 a.m. manipulates higher. We form SMT at the highs. And then now we can see distribution lower. Okay. So this is just in the sense that we have been trending bearish. We're in a sell model. 8:30 holds manipulation. Then we have 10 a.m. continuation. So this is just, if I see this 8:30 manipulation, I'm using it as this could be a protected high that I can trade away from to seek lower prices. Okay. Now we've covered where is price been, right? Where is price now? Where is price opening? Now, where is price going? This is how we get our targets. This is our drawn liquidity. This is how we get our objectives of where price is actually drawing towards. And we know, studying ICT, price moves from liquidity to inefficiencies. So that's going to be our main targets. But how can we make this even better? How can we find high probability draws and liquidity? Okay. We want to see unmitigated draws, so draws that have not been swept. Um, we want to see failure swings, and I'll get into it next slide. But I'm going to mention real quick is to frame high probability trades. I covered this in my last educational YouTube video. Covered 3 frameworks: reversal, continuation, rebalance. And they all include trading aligned with the power of 3, um, trading towards failure swings, trading towards open draws. And you can kind of see too, is that this is all fractal too. You can see reversal. This could be a New York reversal profile, or this could also just be, um, you know, this could be 9:30 open, or this could be daily open, right? It applies fractally as well as this, right? You could see this as London protraction, New York continuation, or you can see this as 9:30 opens, manipulates. Now we're seeing 9:45 host continuation, but that's covered in that video for entry models. But this is just the daily bias and building a narrative for the day. So we're going to continue on finding high probability draws. High resistance liquidity versus low resistance. Okay, so high resistance is formed from manipulation, large wicks, jagged price action, liquidity that's already been swept. So price doesn't have as much reason to return, right? Price has already visited this zone. So price doesn't need to return, like I just said. Low resistance liquidity is when you get fast expansions, you get quick distributions. This is what you want to trade. Okay, formed from failure swings, close proximity highs or lows, trendline liquidity, unmitigated draws and liquidity. You can see relative equal highs or lows, equal highs or lows, and then clean untouched or like unmitigated draws. Examples. Okay, so identifying high resistance versus low resistance liquidity. How can we do this? Okay, again, we're looking for manipulation with expansion into the key level, expansion out of the key level as a clear way of defining high resistance or large wicks after manipulating a key level. Okay, start from the left, right? We manipulate this low as a turtle low. We have clear expansion higher. So this temporarily is going to be high resistance. Okay, right? We continue higher. This is low resistance. Why? Because it's slanted highs, right? This candle failed to take out this high. This candle failed to take out this high. So it's slanted highs. Okay, we move higher. As we move lower, we engineer a low, come back, we engineer a failure swing, right? This swing high fails to take out this swing high. Okay, so we're generating LR at the highs, and we manipulate lower, forming high resistance here. Manipulation, we move higher. Okay, now what is this? This is a failure swing because it fails to take out this high time frame draw. So this could ultimately create a high time frame market maker buy model. And I'm going to go into the chart because it might be easier to show on here. Okay, right. So now we're studying this high resistance versus low resistance. How can we identify it? How can we use it to trade? Okay. Okay. Next, price distributes or expands lower. Okay. Now we have some accumulation. We're not too interested. But what happens here, right? We form a failure swing to this high time frame draw. We move higher into a high time frame imbalance, and we manipulate this high. Boom, we see expansion through, and we're now targeting this failure swing to this high time frame draw. So now we have high resistance, we have low resistance down here because we're leading to this high time frame draw. Okay, next. Boom, we manipulate these failure swings right here and this high time frame draw, now forming high resistance. Okay, now this low is protected and we're distributing higher because of it. Now look at this, we distribute higher, we're respecting bullish imbalances, and now we generate this failure swing, failing to take out this high. So what does price do? We come lower, we manipulate, and now we're distributing higher as we have more liquidity to target higher. Okay, so how do I use this with my trading? Right, this is where's price want to go. How can I use this to create bias? Okay, so in this scenario, this just happened. This is Tuesday of the past week. We manipulate this high time frame low, and we're expanding higher. Okay, so we want to trade away from high resistance and towards low resistance. So we're going to look on the opposing side, and we have this was engineered liquidity that happened prior to the session, right? We have slanted highs, okay, and we're delivering from high resistance. Now, what else is above, right? We have more highs. We have more highs unmitigated and this LR. So now I'm like, now this drawn liquidity, right? Price is likely to reach these draws because it's open liquidity, right? Price had just swept this liquidity, so there's not much left down here. Think of it as like a magnet. When I guess this could I'm not sure if this analogy is going to work, but right when this are sorry failure swings right here, this is a lot of like magnet, right? We're attracting price wants to draw to this liquidity, but when we have manipulation like of this low right here, the magnet basically like loses its power. It's like a liquidity controlled magnet. When we sweep liquidity, right, we're like the market is taking the liquidity and it's running, right? It's expanding away, showing that there's no reason to return back down here. So we want to trade away from that. Price doesn't have as much reason to return down here and it does to target. We have stacked highs of just liquidity, continuing higher, right? So that's how I can use just draw liquidity to target. Okay. So now that we've established that, right, we're trading away from high resistance and towards low resistance. We want to align that with, our daily profiles and where we're opening up in price. Okay, let's see. Yeah, now the full narrative together. We want to identify where we are in a high time frame market maker model because there's always one going on. The daily power of three will always either start one, complete one, or have an entire one in its own power of three. Daily profiles, we want to understand what previous sessions have done and where New York is opening up. And look for open draws and liquidity, identify failure swings, LR, and trade away from high resistance. When not to trade, right? We want to avoid seek and destroy days. So I'll show an example next slide. But that's just when we're taking the highs and we're taking the lows, taking the highs, taking the lows. So very choppy price action, not probable. We're not distributing, we're just accumulating. NFP week, I'm not going to go too into depth into this. I have content in my Discord and more in depth of when not to trade and when you can avoid or when you can expect seek and destroy days. Okay, this is an example of seek and destroy day, just so you can understand it with pattern recognition. You don't want to pattern it, but if you start seeing this, it might be a sign for you to avoid it, right? Okay, price, right? Price sweeps this high right here and moves lower and sweeps this low. After that, price comes back up, sweeps this high again, comes back down, sweeps this low. It's right. We're not distributing to any draws lower. We're just sweeping the highs, sweeping the lows, sweeping the highs, sweeping the lows. It's just very not like unprobable conditions. Okay, what we want to come out with our narrative. Draw on liquidity. Okay, where is price going? Open draws, we have LR, we have identified failure swings or trading away from high resistance. Always want to trade away from low day or high day that's established and that aligns with like the higher time frame power of threes. Manipulation level. The level that will be swept before we deliver to our draw on liquidity. I'll go over that and how to find your manipulation levels. And invalidations, I went over this, like the high time frame imbalances are key levels that need to hold to send price to one side of the range versus the other, right? So you can using conditions and invalidations to establish your low day or high day, lower session, high session, or establish where price wants to go in the range. Okay, now I'll just go through some of my pre-markets. Okay. Pre-market, or I'll go to this one right here. Pre-market notes. Following high time frame manipulation on all assets, plus S&P at the low week yesterday, we have seen great bullish expansion. This could be potential for a high time frame buy model, and I want to see continuation of that. All three assets have clear draws on liquidity higher, so looking to see price manipulate lower off open to seek higher. Okay, this is July 9th, right? So what has price done? Okay, price had just manipulated on all assets and created S&P at low of week yesterday, and we have seen great bullish expansion. So this could support a low of week put in. Okay, potential for a high time frame buy model. Right now we put it the SMR for the high time frame market maker model. We want to see continuation of that, or new stages of distribution. Now we're identifying where price wants to go, right? All assets have clear draws and liquidity higher. So looking to see price manipulate lower off open to seek higher because you always want to see our power threes develop, um, in the opposite way. Like if we're bullish, we want to see price open lower, manipulate to expand higher. We have all three aspects. Where's price been? Where's price opening? And where's price going? So how can I find the key levels I want to trade from? Okay. I use invalidations and previously manipulated levels to find these key levels. Okay. So look, we have these draws and liquidity that are very open. Okay. Clear draws and liquidity higher. This SMT at the highs isn't relevant to me. I just see this as the Nasdaq. Nasdaq is in the middle, ES in the left, the YM's at the right. Nasdaq is the strongest asset in this sense. This is right before market open. Okay, so what am I looking at for key levels to trade away from? Okay, right. I see that you can see the time frame in the bottom is that we see around 7 o'clock we had manipulation lower into this high time frame imbalance, and we had clear expansion away higher. So in the sense that we're bullish and we've expanded so much further higher, I don't want to see price revisit this low because this should be a protected low. If it manipulated, this would be high resistance. I want to trade away from that, and I want this to be protected. So I'm using a condition or a fair value gap, this 30-minute fair value gap. I want to see this be respected, right? This being respected would mean price would continue higher off the fair value gap, and also that would mean this low is protected. So I want to see this fair value gap be used as continuation to this 4-hour fair value gap, as well as there's going to be a different time frame imbalance here and imbalances here in YM to seek higher prices. So that's how I'd form my narrative. Okay. And this is for me a very clearly bullish day, as that we've had an established low we put in. I think I can pull this up here. Where is it? June 9th. Yeah. Let's see here. Right. So this is where price is opening up. And this is the 30-minute gap that I want to see get held. Okay. So I'm building a narrative, right? We have established this manipulation lower on all assets, and we could see this high time frame buy model, right, be put in. So I want to see this low be protected, as it's, it could be high resistance as it's manipulated and we expand it away. So this is the clear gap I want to see be used as continuation. So what does price do? Let's see when it opens. Next candle. It manipulates lower into this 30-minute gap. And what do we see? We see expansion higher into this. There's a 4-hour fair value gap. And then on other assets, right, we had the clear draw on liquidity higher on ES, as well as the clear draws higher on YM as well. And notice how that we're respecting this fair value gap, showing that price this is a protected low, and now we're seeking higher prices, right? So that's how I build the narrative. But what happens after that is I don't like, for phases of price, like obviously we have accumulation, manipulation, distribution. We can be range bound and stuff like that. But to see a new phase of price, we need to see a new key level be hit, okay? Or we need to see manipulation. So when we reach this drawn liquidity on multiple assets here, I don't know what price will do, because it's a new key level, and we could, retrace off of it. We could reverse. We could expand through it. I have no idea. But until that level is hit, I want to see these fair value gaps be held and help price push up to that drawn liquidity. Okay. Next one. Okay, so this one. All assets have expanded bearish overnight, sweeping high time frame sell side. So what has price done in the previous session? We expanded overnight, sweeping high time frame sell side. Now within the retracement phase, significantly less expansive than move down. So now I'm noting, right, how we expanded down to this draw, expanded bearishly, and now we're very slowly retracing, generating these failure swings at the lows into this high time frame imbalance. Depending how 930 opens, like depending on the power through development, the initial drawn liquidity is pre-market highs. However, can see high time frame continuation back to low of day if power threes develop accordingly. Okay, so right, all assets have swept sell side, so I can see a new phase of price. Right, we're in retracement, or it could be reversal. I'm not sure. What do I have marked? I have marked this clear. This is a higher time frame imbalance. I'm gonna pull it up on my chart, but I have. Let's see here. I think it was this day, right? We after we swept this high time frame sell side on ES and NQ, right? We're retracing. So obviously, because we have been recently, we are like kind of trading at all-time highs. We were, but now we're hitting a high time frame key level. We could see some sort of reaction here. We could see, price maneuver, and also we're in a high time frame for value gap, right? So we could see a different phase of price after hitting this draw. So, I'm definitely a little more cautious, right? Because it's like a weekly, could spark a weekly buy model, in which it did. So now I'm looking for my invalidations. Okay, so if we are to, respect these bullish fair value gaps, then we'll likely see higher prices. And if we disrespect them, then we'll likely see lower prices. So, and then also how the power threes develop, right? So obviously we want to see our power three develop opposite to our drawn liquidity. So if we want to continue bearish price action, we should manipulate higher and then, respect this higher time frame imbalance and maneuver lower. So here's how I'm playing this, right? So whenever you go into the market, you want to have two scenarios. Okay. You don't want to be blinded by a certain scenario. You want to have two scenarios. You want to understand, right? Price, what would price need to do to move higher? Okay. Price for this to move higher, we would want to manipulate lower, respect this imbalance, and then distribute higher, making this a protected low because it just swept this high time frame sell side, right? However, if we're bearish, and I do this every day in my pre-market, if we're bearish, I'd want to see us manipulate, right? Manipulate high of day, this level, or this high of session. And then I want to see price disrespect these bullish or value gaps to maneuver lower, right? You want to have two scenarios, the key levels that price could use to maneuver lower and key levels price could use to maneuver higher. And then draw liquidity wise, right? This could be high resistance, and we don't know that just yet because obviously we haven't had as much time to see this expansion. And this could be lower resistance, right? Look at this. We have lower resistance liquidity just engineered up here as we're just generating failure swings at the highs. So obviously this could be a clear target higher, yet we're just very far proximity from it. So it really all is just like in this gaps of continuation and validation. So if we want to see higher prices, we're going to respect this fair value gap, respect this protected low, and then move higher and inverse this 1 hour bearish fair value gap. Okay. So that's how you want to use the invalidations and conditions to structure two sides of the market, which is very important. But yeah, I think that should be good. I'm not sure if I missed anything. If I did, feel free to shoot a comment or any questions at all. I'll publish this PDF in the Discord. So if you're on the Discord, just join it and it'll be in the free education section. But yeah, there's a lot to cover with daily bias stuff. It's just I think the number one thing, right, is what is price done? Like, have we manipulated? If we have, we'd want to respect that and play continuation. If we haven't manipulated, we want to see manipulation, right? So be open to that. Understand the session profiles, daily profiles, and use conditions to frame trades on both sides of the market. Trade away from high resistance and trade towards low resistance. Yeah, thank you very much. Have a good one.